Hello everyone, this is MIS. Based on the today's data and current chart, we will analyze the market for the tomorrow. This is the purpose of this channel. Now, as we can see in the Nifty 50, after a downfall, there is a consolidation phase at the Fibonacci retracement point of around 0.5. Based on this area, we will analyze the market for the tomorrow. In this, we see that what will be the move for the tomorrow on the daily basis. In the daily chart, we see that there is a consolidation phase for around uh, that from the 8th April there is a consolidation phase. Now, as we know that traders need a money and want some money on the daily basis, but they forget that on the long term basis what is going on in the market. The market are stuck at a one point and this is forming a zigzag pattern right now. We cannot on the daily basis say that what will be the move for the tomorrow, but as we go in the down in the smaller time frame, we see there is some type of pattern for the daily basis. Now in the daily basis we can see that this is a this is a this is a previous month high and previous week high, while previous week low and previous week low, we can see this is a previous week low. The market is in between the previous week high and previous week high and previous week low. We have to find that what will be the move for the tomorrow. Now on the daily basis we can see the market is in under the 200 EMA, which is in blue in color, and it's also under the 100 EMA and 50 EMA and 20 EMA. Now on the broad basis we will see that 100 EMA and the 200 EMA, but for the daily basis we see that 50 and 20. In this we see that the market is in this position. We see that the market today's market forming a inverted hammer, but this inverted hammer will be confirmed when there is another candle will form in respect to this inverted hammer. Then it will be confirmed that it will be act as a inverted hammer. But we can see that this inverted hammer is under the previous day high. Under the previous day high, today's market is closing under the previous day high. You can see that this market is closing under the previous day high, so we cannot say that the market can move up to the uh, up to the that mark. So as we can see that there is a 200 EMA, under the 200 EMA, 100 EMA, and under the 50 and 20 EMA, and even though market is closing just previous day high, low to the previous day high, and we can see that the market is also forming the inverted hammer. And there is also some point I want to discuss with you on the smaller time frame, which is important for not only trader but a swing trader also. In this we can see on the lower time frame, as we compare as a 2 hour, we can see that there is a multiple consolidation area in the 2 hours period, which is depicting that the market can act like a uh, retracement area, and then it will go to their direction. Now based on this, we see there is no right now there is no right now strong points which indicate that market will go upside, because it's forming low and then low and then low. It will not go through that direction. On that basis, we can also see that at a 30-minute, 15-minute, the market is consolidating, and market is consolidating and even though at a last point of movement, it is forming a inverted hammer. But we can see also one thing here: the market is at a 15-minute is trying to stay at a 100 EMA, and there is a crossover between the 20 and 15 EMA, which is a very strong, not a very strong point that market are recovering. But 15 minutes we can use as a trading point, trading time frame. But on that time frame 15-minute, we cannot predict a long term movements in this market. So as I request you, for a long term and for a uh, 2 to 3 day vision, you should go that market on the based on the Fibonacci retracement, based on the Fibonacci retracement, market can wait at the point of point 0.5. So you can plan your trade as according to that market is under the 200 EMA on the 15 time frame, even a long time frame such as 2 hours time frame and daily time frame. You can see that market under the 200 and 100 EMA. So based on that points, you can plan that the market will try to move and adjust itself to at the point of around 23,841, or just try to cover this gap also, to refill these gaps, and will after that it will go. After that we will predict the further movement, that what will be the market in future. But for the next day, we can think that the market will try to move and cover up to the point 0.5 Fibonacci retracement, or to cover this area. Even though if we are seeing the 15-minute time frame, we can see that 15-minute time frame we can see that the market is in right now at the equilibrium point. Because if you are seeing in the long term, in the broad term manner, the strong high is these things. This is a strong high, this is a strong high, and this is a weak low. This is a weak low, and market is in between that. It's called the equilibrium point. Based on this equilibrium point, we will predict the future of the market in the for the sometime points, such as for the intraday, for the swing points, for the swing trades. Now, to see that, as we discussed, the market will cover these gaps, or it will uh, try to touch this Fibonacci retracement. After that, we can think that market what will be go in the future upcoming days. But for the tomorrow, I can suggest you that market will stay here, stay here, or it will try to touch at these points, and after that we will predict for the future. Thank you so much.